Welcome to the Maryland Mortgage Market Rate Update for the week of June 24th, 2013. Hello, I'm John Thomas with Primary Residential Mortgage here to give you your update. Well, last week was a brutal week for Maryland mortgage rates. Rates surged higher after Wednesday's speech from Bernanke. If you look at the bond chart on the screen, you can see the giant red candle down on Wednesday. Again, Thursday sold off, and then again, huge sell-off on Friday. The selling has just been piling on after Bernanke's speech on Wednesday. What happened on Wednesday? Federal Open Market Committee released their meeting minutes. Standard talk, basically bond buying program going on to 2014, and then question answer afterward, Ben Bernanke. That's what went crazy. Same thing happened last May 22nd, which forced home loan rates higher. You think he would have learned, but he didn't. Came out with some double speak, contradicted what was in the minutes, said that we might start the bond tapering program this year and end it mid-2014. Market does not like double speak. Everything sold off, stock, bonds, oil, everything crashed. The bonds just follow through. Crashed again Thursday, huge sell-off on Friday. Now, we are recommending cautiously floating your Maryland mortgage rate to start the week, as bonds are very oversold and we're looking for some buyers to jump in. We think the selling has stopped. We'll know on Monday when the market opens. So cautiously floating your Maryland mortgage interest rate. Now, we did have some good news last week in housing. Existing home sales rose by 5.18 million units for May of 2013, which is 12.9% higher than May of 2012. And that was which was 4.5 million units. We also saw housing starts for May of 2013 rose 7%, which is up 28% from May of 2012. Housing starts is a measure of how many new construction bills were started in May 2013. So that shows, again, new construction is doing very well because the inventory in Maryland is low. So it's putting pressure on home prices, which is making home prices go up. So that's great news if you own a home and great news for appreciation. What that means is, do not wait. Now is the time to buy. As we said, home loan rates have jumped up. They're about where they were in October of 2011, which means if you're looking at a rate quote, it's between the mid to high fours. Okay? That may shock you, but it's still an awesome rate. Still a great time to buy. We're not going back to the threes. It's just gone. It's off the table. So get out there, get under contract, get your new home, or refinance if you still need to. Now, last Thursday, we saw weekly initial jobless claims come out. They came out higher at 354,000. That was 18,000 more claims from the previous week, and it was above expectations of 340. So we keep getting this flip-flop in the labor market. We cannot get a clear trend of the labor market improving. Again, this was a setback. Each week can vary. We need good news in the labor market. We need the labor market to come back to get us back on a good recovery economically. We did have great news on inflation. Consumer Price Index came out last week at 0.1%. That's great. It means inflation is very tame. The Feds have actually lowered their inflation prediction for 2013. It's going to be between 0.8 and 1.2% for the year, and that's below their target of 2%. So that's good news. In the local news, the next free first-time homebuyer seminar in Towson, Maryland is Saturday, July 20th from 10 a.m. to noon, and that's at the Sheraton Baltimore North Hotel. You can register for that event by giving us a call at 410-412-3319 or online at www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.